to the Web3 Prof Podcast.
Good morning and good afternoon. I'm here with Erik Ashdown, who is head of ecosystem at Covalent. Thanks for being with me here today.
Thank you for having me, Jay.
So let's just kick this off. What is your story when it comes to Web3? How did you get in? What's the beginning days?
So I used to have a music startup many years ago. And we got to this point where we needed to do royalty accounting. We were trying to do, so it's a really innovative way to sell music. I won't go into the details of it, but we needed a royalty accountant. Someone who could do all of the ways we wanted to sell music. And I realized that when I talked to the royalty accountants, they said, this is too bespoke. There's nothing we can do about it. So a friend of mine said, why don't you just do it on a blockchain? So I ended up researching blockchain, Bitcoin, getting into it. We never actually deployed anything because it was just like, this is a nightmare, and this predated smart contracts, which in retrospect, this is the logical way to do it. So if anybody wants to do a music startup with royalty accounting, come knock on my door.
You're the guy. You've done the hard work.
I've done the hard work.
So this is like what? So Ethereum's not, this is like
2014, 2015.
Okay, so Ethereum's not a thing yet.
I think it was just starting out. I'd heard about the DAO. I had heard of it. There were rumblings. I wasn't super deep by any stretch of the imagination. And somebody said, then I started reading about Bitcoin, and then somebody said, well, why don't you just go buy some Bitcoin? So I went to this random Bitcoin ATM, put in some money.
You're in Vancouver?
Yeah, got a piece of paper, and I was freaking out, and I was like, what have I done? I did that, and then I lost it for like many years.
Did you find it?
I did find it eventually.
And was it a good investment?
It was a good investment. I lost it for like 2-3 years, and then I got really into crypto when I was working for a company, and at night we shared an office. It was with a hedge fund, and at night I left my motorcycle gear because I went to grab a drink like around the corner, and I went back at like 11 o'clock, and there was this kid there. I said, "What are you doing?" He says, "I'm just trading crypto." He says, "I'm investing in ICOs." I said, it's school me. I said, I have time. So I sat down and he just explained everything he was doing. I said, how are you charting against Bitcoin? And he showed me, and I was like, okay, I'm going to get into this now because there's more money, and now it's not like I was checked out for a while. I got in, got really a good understanding of the space, saw lots of things from 2017, 2018, which is when I'd say I got in more proactively. Saw the collapse and then just of everything, it was warranted. And I just said, okay, well, there's a lot of great here, or a lot of potential. This is clearly where the future is going. I couldn't be convinced otherwise. So I said, all right, I'm not going to leave and go do something else. I'm going to stick around and see where this goes. So I just, I stuck around and never left.
Wow. This is the Web3 Prof coming at you. I just want to take a minute to thank one of our sponsors. They make this podcast possible. thecryptoboutique.ca. They're a really hot website. Sell lots of cool stuff related to crypto, books, clothing, most importantly, cold storage wallets. I encourage you to check out thecryptoboutique.ca. And one of the products that they sell, which is the Cool Wallet Pro. It's a thin credit card sized device that is cold storage. It takes your keys, your tokens, removes them from the internet and the security issues that you may face, and allows you to hold those keys so that no one can take your coins from you. You know what they say? Not your keys, not your coins. Check out thecryptoboutique.ca and the Cool Wallet Pro. Thank you. Okay, that's interesting. Thanks to that kid. Have you ever reached out to him and be like, hey man, you changed my life?
I still talk to him to this day. He actually messaged me recently, and I ghosted him, not for a bad reason. I was just busy, and I'm like, oh.
Do you want to do like an apology here live on podcast?
Vince, I'll get back to you. I promise.
Okay, so something that you're passionate about is decentralization. So can you maybe explain what is your definition of decentralization, and why is it important? I think there are pros and cons to decentralization, but why I'm specifically interested in it is I think we're getting to this point where you see these massive parties and everyone owns everything, and it's just one or two conglomerates, it's just one or two massive corporations. Like I remember, was it last year that AWS went down for a day and Facebook was down, everything went down. Right.
And you had this moment where everything fell apart. Mm-hmm. And the Twitter account from Twitter said, hello, literally everybody. And I remember laughing so hard when I saw that tweet, but I said, this is a really good example of why you actually need it from a fundamental level. You're seeing things like from a supply chain and logistics level now where, okay, what happened when we relied on all of our supply chain on Asia for the last decade or 15 years? And now you're seeing supply chain start to revert, prices are going up. And I think when you rely too heavily on one centralized provider of anything, not just, this is nothing to do with Web3, this is just in general, you'll run into problems. So I think when it comes to money, when it comes to identity, when it comes to how you live your life, what you do, all of these things, I totally believe in decentralization because it just reduces counterparty risk for everything.
So you're really talking about like, I guess you're talking about the traditional way we've done things, which is, big organizations control a lot of stuff, governments or companies or whatever. You're also talking about like the infrastructure behind these things. And if it collapses, the whole world kind of falls apart. And so do you see a future, or do you see a world in which decentralization is possible in many different areas of our life? Like we hear about like decentralized storage, we hear about decentralized internet, decentralized, I don't know, rendering, like decentralized whatever, anything. Is this a realistic way to solve some of these problems?
I think you're in the early stages. So I talked to some of these guys who are in the decentralized storage space. And what I find interesting is I've had this thesis that decentralized storage will eventually get adoption. And usually when I run into them at conferences, they're not super excited. They're kind of, they've been putzing around the same thing for a while. Traction is question mark. I think now, everyone said the cloud has limitless growth. I think we've seen the growth of the cloud because the cloud costs are getting so crazy expensive that most people are moving their databases or their servers back to on-prem.
Oh, interesting.
I'm seeing this because the costs are a fraction.
So why has it gotten so expensive in the cloud?
Because you have got people whose jobs are to push margin.
Okay.
They have their bonuses, they have their quota, and then one person leaves, so they need to make up their revenue from another client, so they increase things. They're just trying to do anything to increase cloud costs because the margins are so fat.
So it's not that the technology requires more revenue to survive. They're just taking bigger profits.
They're taking bigger profits, and it's like, but the thing is, it's consolidating with a handful of large cloud service providers.
Right.
So I think on the decentralized storage front, why I think it's interesting is on-prem is obviously going to be the cheapest, but there's higher expenses. But when you see decentralized storage, where it's like, hey man, I've got this server, I could spin up, I could leave it in my closet. I might store, 5% of what somebody, like a duplicate copy of what someone would be on 5% of a duplicate copy might be on a server somewhere else, and I can make a little of the speculative asset. I'm like, it's interesting.
Yeah.
Like, it's more cost effective if they can fix some of the latency problems, and the technology gets better over time. I think it's a logical solution where we might not everybody. People who need a little bits of storage space won't necessarily need on-prem, but this is a viable solution because it's sort of a race to the bottom where one validator will outcompete another validator by running better, cheaper infrastructure to earn more token, and it's like it just creates a better equilibrium.
Yeah.
And I think that applies to a lot of things because when you look at software, you look at SaaS, it's like software seed. What is it? With Peter Thiel says in 0 to 1. Like software's had 50,000% exponential growth. Like it's been crazy, right? In terms of like the adoption and where we are. So I think we're at the point where we're about to see tokenization is the last logical frontier because there's only so much money that you can pay before you're like, okay, well, we have to now reduce costs even further. But the logical thing is like get rid of all your operational expenses, capital expenses, like labor expenses, and just like decentralize the entire thing to make things cheaper for everybody else. Yeah. So it seems like the logical end game is public service goods with like selling services on top of it. So
is it realistic to think that we can, that decentralization truly is scalable? Because this is obviously one of the issues, like that Bitcoin has, for example, is like the scalability of some of these technologies is questionable.
I think everything's early, right? Like, what was it? A few hundred years, nobody ever said the printing press would scale.
Right.
Like it's you will it scale is a question of time.
Yeah.
I think that I have a talk that I did recently, and it says the race to 100 million. And if you look at a lot of Web 2, Facebook, it took them, quote me on the exact numbers, I think it took them 5 years to get to 100 million. And then Twitter took them 4 years. And then Snapchat took them 3.5 years, and TikTok did it in 2.5 or 3 years to 100 million.
Wow.
But because we learn how to build these social networks in a centralized manner. It took Ethereum 5 years to get to 100 million. But it's a net new curve, right, of technology curve. And it took 5 years to get five. And when I say got there, it means like there's been X amount of wallets created that have sent a transaction, not received, but created it. So when I look at that, I'm like, technology goes in these adoption curves, and I think we're at the inflection, almost at the inflection point of. Now we're not quite at the inflection point between Web 2 and Web 3 because it's the next logical frontiers like AI, blockchain, VR, AR, et cetera, et cetera. I think we're almost there. I say that because I don't think we know what decentralization truly is. I don't think we understand all the use cases. I don't think we've thought enough into it. But we're sort of at that point where like 10 years ago or 15 years ago, everybody sort of saw BlackBerry was the beginning of mobile, and you saw, Facebook is this desktop thing and it's social networking, and you saw like the beginning of the cloud with Amazon launching this cloud service provider because that was the beginning. I don't think we all knew back then that all this stuff is going to be so interrelated to what it is now. And I think we're seeing the same thing again, where people are subject matter experts on like all in on blockchain, all in on AI, all in on VR, AR. I think you're going to see all of these things converge as like the next era of the internet. So I think until that's very clear how it happens, we're super early.
It's interesting, kind of your analogy as far as like how Facebook and Twitter scale. Another interesting thing that I learned is like when the Egyptians built the pyramids, the next time someone built a stable structure as high or higher than the pyramids was 4,000 years later when the Eiffel Tower was built. It took the next person 4,000 years to figure out how to do that. And then as soon as that happened, it's like boom, 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 boom. It's like when Erik Liddell broke the 4-minute mile in the Olympics in like the 20s, it's like the next year, no one had ever done it before. The next year, like 25 people did it or something like that. And it's amazing when somebody kind of breaks through like that, how quickly the rest of everybody kind of walk on the shoulders of giants to make that thing happen.
Because there's a formula. And I think that's the thing, is you got to wait for the formula.
Right.
So that's where I think in some cases, crypto for the longest time has been the hammer waiting for, it's a nail looking, a hammer looking for a nail.
Yeah.
But as time goes on and you start seeing other iterations of crypto projects launch, you start to see more of that start to take play. And like, I think, Bitcoin was obviously the first. Does Bitcoin scale? I have no idea. I mean, I have mixed feelings about Lightning. I mean, I think it's too complex. I don't know where Bitcoin's going to go. Once I heard about NFTs on Bitcoin, I said, that's super interesting. That is very interesting because we're starting to see some utility. The question is, it's all the mining, it's all the costs, it's all the upkeep, it's all the niche. And it's like, there's now been so much infrastructure built on Ethereum and other smart contract platforms that I think it would just be a very heavy lift in order to migrate that.
Right.
I totally think there's a use case. I'll die on the hill that there's a use case for Bitcoin, and it probably is store of value. Especially like, you're seeing all these bank collapses and all these things happen recently. But, I think that's where it really hits its stride. The problem is like accessibility is not there. And I think we've got a higher chance of building accessibility using infrastructure and then like wrapping Bitcoin or like parking Bitcoin in cold storage or doing something.
Boy, the Bitcoin maxis are not going to be happy with these comments.
But I don't throw out Bitcoin. There's no throwing out Bitcoin. I think it's important. I just don't see the utility from a, you can't build a social network on Bitcoin. You can't build a lot of things on Bitcoin. It's just not there.
I guess that maybe the question is like, does it need further utility than store of value? Like, can it just be a currency?
I think it could. I legitimately think it could.
Sometimes people talk about this with NFTs as well. It's like, well, what is the utility of your NFT? It's like, well, maybe it can just be like cool art.
Yeah.
Like maybe not everything needs to, but certainly some things are not cool art, and they need to have some kind of utility because it's just not good enough the way that it is.
I 100% agree. Okay,
so if we're looking at I've got whatever company and I'm thinking, okay, decentralization, that's the way I want to go. What are the things that would allow me to consider decentralization? Are there some things on a checklist that you would say, okay, like if you want to become a decentralized company of whatever you currently do, if these things are part of your business, then decentralization might be a helpful thing for you. Do you understand what I'm asking?
I think so. I have a couple. I'm going to bucket these a little bit. One is, I think the idea of DAOs, and I'm going to stick with DAOs, is very novel. I think the idea, and I think OpenAI did this, where OpenAI is a for-profit owned by a not-for-profit. I think the idea of having DAOs used for governance, transparent governance, is brilliant. I think, people would pay money for governance, as you're seeing with some of these governance tokens. Like, they have liquid value and people are happy to pay them. So I think to govern important things, it makes sense. I would not be shocked if you saw somebody like Mozilla, because Mozilla is a giant not-for-profit, do something like that, because it makes sense. It's like, we have our employees, we have our everybody, you have different types of tokens that you accrue. Maybe there's like much like shares, like Class A, Class B. And you earn in voting mechanisms, but you don't necessarily earn in profit share unless everybody chooses this is the best thing to do. So I think if you have an established organization and you are a not-for-profit, I legitimately believe a DAO is a very logical it could be proved to be a very logical liquid or exit strategy, especially if you have like large corporations or other not-for-profits or other companies that rely on you would want to be part of governing this or managing this or like moving R&D. I think DAOs in the world of open source software development makes total sense. I totally get it. I think it makes very logical sense that somebody would want to be involved in guiding it. You saw this with Red Hat, where they sold to IBM. I think it was $32 billion. But Red Hat just built on top of open source technology. And so I think a DAO in that bucket makes a lot of sense. Anything that can be guiding open source or like is involved in public goods or something could be a DAO and could have voting. And I think it's interesting because with DAOs you get if there's enough data on chain, you can see who the real subject matter experts are. So, it wouldn't be, oh, well, I know all about, I don't know, how to fix a gumball machine. Well, it's like, do you have anything that proves it on chain? That's a terrible example, but you see where I'm going. I think that's one regard. The next one I would bucket into and I would put blockchains, a lot of this in the not-for-profit sector also. But the next thing I would say is, and we're not quite there yet, and there really is no playbook, is anything that has a rational token accrual mechanism. So when I say this, it's, let's say we were to take Notion, the software company. It's an awesome product. Many people use it. And we were to say, let's decentralize this. There's a pretty good way that you could say, okay, we're going to, every time you sign up for Notion, you don't have to pay US dollars. Now there'll be a buy mechanism from USD to Notion coin to everyone running some lightweight servers and to people actually working on the protocol. There's a finite cap. This is an alternative to taking Notion public because there's a real token accrual mechanism. But pay people. Like, everyone gets paid. Token holders get paid. Validators get paid. People running the servers get paid, which is a logical exit strategy or liquid exit strategy, which does not involve selling to the government, selling to somebody, taking a company public. It involves like, how do we give this away to our community and let people who love it be involved and like maintain this growth and do this thing, but really turn it into a public service good. So also the cost might reduce and everybody gets to use it. So I think that's the frontier, but we have not seen anybody really get to that point where there's a rational token accrual model built into a lot of the projects they're building.
So when you talk about DAOs, is there a problem with putting questions to a community and saying, hey, what should we do next? What if the community makes a bad choice? What if the community isn't educated enough to actually make a decision? Even just sometimes in referendums in politics, sometimes the voters don't actually know. Actually, they almost never know.
Like Brexit?
We could talk about Brexit. We could talk, here in BC, we had HST tax. That was a thing for a while. I don't know if you lived here then. It was sometimes, we make the wrong decision. And so isn't a DAO just another one of those types of scenarios where you're trying to get people to vote? They're like lazy. They don't read up on it. They cast their vote. I'm part of Helium. I've got some Helium nodes. I vote sometimes without really knowing what I'm voting for.
That's a great question. I think it's how you set up the DAO. Like if you want to set up saying, hey guys, this is only weighted to anybody who is signed, whose wallet connects to their GitHub and has at least 500 commits with the hashtag Ethereum, and it has to be on public goods. Okay, if it does, your vote is 1 for 1. I think it depends on how you want to govern the DAO, and I think also we're in the very early stages of that. I think everybody having a vote, I don't buy that in society. Like, I've met people who are insane and don't have any idea what's going on. They're like, I'm voting this, and I'm like, yeah, you should not have the ability to vote. And and to that aspect, I think that or everyone can vote, and some votes just are weighted heavier. Right. So if you have, if you're saying if there is somebody who has done a ton of contribution at Helium, they're one of the largest contributors to the open source component. Do I think they should have a heavier weight? Absolutely, because they have the most context. Right. So maybe their wallet gets 500 votes or 1,000 votes or 10,000 votes. Yeah. Or it's, based on how many tokens you have, you get a multiple of votes based on other external factors. Yeah. And I just don't think we've gotten to a point where those things have been accounted for, or there's been enough experimentation done. A lot of this, what we see is if you have more tokens, you get more votes in a lot of DAOs, which I think, can be problematic because, if you got a lot of money, you can have a lot of votes. Mm-hmm. Maybe that's the way the current political system operates anyways. I don't know. Maybe it's no different than how we currently run things. But I think that's you go back to the norm because it's what you know. Right. And that's where I think you have to start there, and then we'll see further progression. I think the other problem with DAOs today is there's not a ton of money there. Like DeFi, there's money. There are lots of things there's money, but there's no way to sit down and rationally govern it. Because I like sitting here, when somebody said, hey, I want to putz around with the DAO governance for the next 5 years, I'd be like, good luck. I don't want to put my money in that. Yeah. It's not that I don't think it's necessary, but it's just who funds it.
Right.
So I think it's the tooling is not there, the revenue is not there, and the DAOs would have to see the value of actually having this. But I think it's important. I think we'll figure out commercial. There'll be a commercial means to do it, and there'll be it'll be a DAO funding another DAO with like something will happen. There'll be something that does it.
So are there ways that you can figure out or think about that? Okay, DAOs are good, but here's actually a way that DAOs are going to cause more problems. I feel like I brought one up, with maybe inexperienced people voting, or people who lack the understanding and knowledge. Are there any other challenges that you foresee?
So many. I don't think we've scratched the surface. I think there's just what we've seen today, which is in some cases poor governance, where it's like the foundation is going to cast its vote, but it's like, guys, you own 80% of the network. Like, you should not have a vote in this. Or it'll be getting the execution done once the vote is done, or it'll be the centralized entity wanting to do it. So I don't know, because I don't think we've seen enough experimentation, but I think there's some super cool people experimenting with a lot of things. So I just think we're too early to know.
Yeah.
That's where I think someone's got to do it at scale, but you got to walk before you run, which is like to the hardcore infrastructure of like decentralized other stuff. Like, you're starting to see that now in the earlier, like, you're starting to see a bit of that.
So when we talk about decentralized infrastructure, what gets you most excited?
Anything that is a token, like if you can say sort of like I said with cloud costs, like you get to the end, it's totally saturated. Now we're going to race to the bottom and reduce the costs. Anything that is a token accrual mechanism is, to me, I immediately get interested, because I could buy a token and then I could say, or I could buy, work for, whatever. I could have something, and I will see a rational way of, one, how this can turn into a public service good, like a DAO where everyone votes and chooses what happens, but how the token will increase in value. And it could be a good, considered I say with air quotes, don't quote me, air quotes, good investment from my perspective where I'm sitting. And so I think with DAOs and anything that is a token accrual mechanism, it's just, like I said, it's another type of liquidity where, you can go public, sell your you can go public, you can get an acquisition, or you'll be able to turn into a DAO, provided like there'll have to be a bunch of benchmarks, regulation, and things like that. So I'm not openly endorsing, it's a lot of work. But I think that is interesting because it adds to the decentralized nature of crypto and decentralized nature where things could go, and it reduces counterparty risk, and it reduces the fees for how much things should cost. In theory, and it just makes overall better products, because the people who are laboring on this actually care, because why else would you want to believe in this token or believe in this ecosystem or believe in this project? So I think it's very interesting.
Are there DAOs that you've seen that you think, oh, that's really great, or they're really doing it well? Do you see any use cases? And obviously there's still there's a lot of progression that needs to happen for this to work efficiently, but are there some that you think, oh, that's kind of the best use case, or that's the best case study at this point?
The ones I like the most, or I'm most interested in, there's something called creator cabins. It's very much a DAO. It's not infrastructure at all, but these guys are buying land. Don't quote me on this. I can't remember everything, but they're buying land, and then they wanted, like, the community governs the land of what you can do with it, but there's people who can build on it. And I was like, that's sort of interesting. Like, there's something here. It's like a co-op almost, but a tokenized co-op from around the world. I think the ideas are there. Execution is the big question mark. Where's the money come from? How does it go? How does it accrue? Like, is there somebody who has any background in commercial real estate or anything that knows what's actually happening, or is it just an idea? Yeah. I think that's interesting. A lot of the stuff that are spitting out of Seed Club is also generally interesting.
Seed Club?
Seed Club, it's like a venture. They're trying to build the Y Combinator of DAOs. And so it's very much like it's like an accelerator program. But there's a lot of stuff that I look at and I'll say that's interesting. Full disclosure, I'm part of this also. Like I'm not personally invested. Like I own some tokens. Mm-hmm. But I looked at that. I was like, this is very cool. It's like you get to see what people are thinking. Like, one of them is these guys. They're called Krause House, and they're trying to buy an NBA team. That's the goal. The goal is for a DAO to own an NBA team. Right. And you're like, this is ridiculous. But at the same time, it's like, I remember when the voting process to choose all these DAOs was coming in. It was like, this is so ridiculous that you have to say yes. Like, this is like,
so like, have they raised money?
They've raised some money, yeah.
Like millions?
I couldn't tell you. I just think the idea is just like, it's awesome. It's just like, it's like our goal is to own an NBA team. There's another DAO, I think it's called Lynx, where it's like they want to own a golf course. Right. And I'm like, these things, it's the right amount of ambition in my mind, and it's focused. So everyone is working for something.
A very specific thing.
Very specific.
Well, I think what would be interesting is like, so, okay, you buy an NBA team with a DAO, and then, well, you want to trade a player and like all the DAO members get to vote, you might end up with a really good team or a really terrible team. But it would be interesting to see as like the public contributes to the decisions made, especially when it comes to acquiring players, how much they get paid. It'd be a fascinating experiment.
I have no idea. And that's where I'm like, this is an interesting, back to the Mozilla point. Like if you have a not-for-profit, that is a DAO, that owns the for-profit, which is like, how do you run that? I think the Green Bay Packers are owned by a not-for-profit or a co-op.
Oh, really?
I think so. I remember reading about this somewhere. I think they're the only one that doesn't have a billionaire owner. I think there's something about the Green Bay Packers of how it's
Yeah,
owned.
interesting. I mean, it is in Green Bay. Do you know where that is?
Wisconsin.
Yeah, nobody. You didn't know that. How did you know that?
I've been to Green Bay.
Really?
I drove through it once. Yeah.
Okay, exactly. You drove through it once.
I regret not buying a cheese hat. That's my biggest regret.
Oh, yeah, that's a thing there, isn't it? Okay, so when you look at what are you most excited about, generally speaking, when it comes to Web3? When you're at home and you're listening to podcasts, you're like, oh man, that is like so super exciting. When you hear about something new, what gets you? Is it the big AI hype that we see now? Was it the metaverse of last year? What's the thing?
I think the thing is, so people have all these ideas. They're like, oh, the future of Web3 is blank, blank, blank. Like to the point I made earlier, it's when everything converges. So I'm less interested in like, this is Web3 is going to be used for this version of the metaverse, or like for gaming, or like DeFi. Like DeFi to me is I think DeFi is great, but I think DeFi is sort of like the problem with DeFi is DeFi is great because it's transparent. It's all the problems of the financial system, but open and accessible, and you can see what's in whose wallet. And there's a lot of great there. The problem with DeFi in most cases is a lot of the underlying assets suck.
Right.
So I think you need to fix the application layer, and once you have the tokenized application layer, because there's multiple layers in the blockchain, then I think that is the thing where I get the most excited and interested. It's not the fastest blockchain that is going to be 100 million transactions per second. It's not the RPC. It's what is the thing that is the application that is going to provide real utility. So I get excited about that when like I hear all this open AI. People are like open AI, ChatGPT, and I'm like, okay, what's going to get interesting is when you can tokenize the data sets that plug into OpenAI, and everybody whose data is being queried by OpenAI and every website is going to get a little bit of
Get paid
something.
Yeah.
That makes sense to me. And if there's
Is that realistic?
totally, why not? Why not? There's tons of data sets. They're querying giant databases. If every bit of data is housed in a database, and let's say my data is being queried 1,000 times a day, and it's generating $1,000 of revenue, and like I'm 5 cents of that, then why shouldn't I get paid 5 cents?
Yeah.
Like it makes sense that like it's sort of when I actually thought when Facebook was going to launch their blockchain, I legitimately thought this. A few years ago they were going to launch, I think it was Libra.
Yeah.
I thought, and I really wish the regulators were smarter, I thought they were going to say, why do you need a stable coin? Why don't you just like buy US dollars, like give your US dollars and pay people back in like Facebook token for their data?
Right.
Like that makes sense to me, because like you are on Facebook, you are the largest, you are the commodity, like you are the natural resource, your data. So I'm like, that would make logical sense. Like pay them 50%. The token would probably go crazy. Like there'd be that token, that asset would be amazing, because it's like you have a finite cap. There's a token accrual mechanism built into it. Like that would have been so cool, but that didn't happen. They're like, oh, we're just gonna get rid of this thing and go on a metaverse, which is fine. So I think it's everything that is the application layer and everything that is like the logical next step to where we're going.
So sometimes I look at Web3 or crypto projects and I don't have any idea what they're doing. One, because they're very technical, or two, because it doesn't seem like they're doing anything. It seems like they're just, I don't know, created a company, in their back room because they have a buddy who knows something. And I think sometimes it's hard for regular people to understand the really technical stuff, or to figure out how to navigate all the nonsense of the crypto bros who are pumping their buddies' token for whatever reason, which represents no assets, no company, no value, no MVP. So I guess Web3 is an image problem. So how do we get past this type of thing? Because right now, my sister-in-law isn't interested to get into crypto or Web3.
That's a great question. I always ask the same two things. Like, I'm pretty straightforward. When I'm talking to people, I'm like, okay, you have a token. Yep. Does it need a token?
Right.
Like, cut out the token. How does this work? And then if it doesn't need a token, then okay, well, it doesn't need a token. And then
but it might need a token because they need to raise money.
Then
it's a fundraising mechanism.
So it depends on the token accrual mechanism. One is, if your thing is a DAO, go get 100,000 people, and go get whatever the critical mass of the mission of your DAO is. Go get that first. Somebody will write you a check. Some investor, there'll be investors be like, hey, I will invest in this because it's straightforward, right? There's one option for that. Option two is, go build a profitable business. Like, go build a business that makes money, and then be like, oh, here's we could put a token here right now. Right. Like if Notion were to launch a token, why not? They have a profitable business. Like, I say Notion because it'd be kind of cool if it did, but I can rationalize having a profitable business than being like, well, I don't want to sell this to Google. I don't want to sell this to Amazon. I do not have any interest in taking this public. I would love this to exist in perpetuity and be a race to the bottom and known as something that just exists for humanity.
Right.
So I think it's I think as time goes on, and every bear market and bull market, every bear market, people grow up, and every bull market, you see the crazy, insane things that make no sense, and it's either too confusing or too niche.
Right.
And that said, then there's the third party, which is like the people who generally raise a lot of money. Is we see fast liquidity, like quick liquidity, because we can build something. Because let's say we're building in blocks. There's some stuff which is like, this will work here, and there's some stuff which is like, it is the logical next step, which where we're going. So you see a lot of the stuff like MEV happening now, which is like, it's all about building on existing validator infrastructure to mine more, to make more fees. I get that, because it's like, it's not a 2 years from now problem. It's like, start making money tomorrow. So it's like, those generally get the biggest fundraisers and have the most obvious liquidity exit strategies, because they're like topical today for what's going on now. They don't take forever to build. And if you can get network effects really quickly, then that's super valuable, because you're entrenched. Like, say what you will, Aave is pretty entrenched. Curve is pretty entrenched. A lot of these DeFi products are pretty entrenched. So it falls into that same logic with the hardcore infrastructure. Yeah. So a DAO, if you can't get a ton of users, or you can't really motivate whatever benchmark you agree on, it's sort of like any other startup. Like, not everyone needs to be revenue focused. To be like, oh, I'm gonna grow 100 million person community. Well, can you get 5,000?
Yeah.
Okay. Well, here's money. Go get 5,000. Like, you have to have the goal and know what metric you're shooting for.
I like how you say go start a company and go start a DAO and get 100,000 people involved, or go build a profitable company, as it's just so easy. You say it so flippantly, but
it's not easy. But I mean, it's like you don't have to have everybody day one. You just have a mission. Like the Grouse House. I can't remember the name. It's Grouse House. The NBA guys was one dude who just wrote something. It was like, I'm going to do this, and everyone was like, that is so ridiculous. I'm in. Yeah. And that's all it was. Right. And if you look at the Discord, there's a website, there's like a ton of stuff. The guy who built the golf course, like it's a crazy idea, but he's like, I'm going to do it. Yeah. So I don't think there's anything wrong with that, but I like those, and the cabin one I said before, I like it. I think it makes sense. I think there's a lot of legal and other question marks, but this is I like there's a vision and we're going to do it. Yeah. And that to me is like, okay, well, do it. Yeah. It's there. You'll figure there'll be a lot of headaches along the way, but the clearer the vision, the more obvious it is. So if somebody said, hey, I'm going to be the #1 DAO and we're going to go, I don't know, buy a baseball team. I'd be like, well, there's, the roadmap from Kraus House is like, you already sort of know how to do it, so maybe this will be easier. Maybe it's like buying Manchester United or something. Right. Maybe that's the ultimate goal.
That's great. Erik's been super interesting chatting with you. I think it's great for us to understand further, understand decentralization and DAOs. It's powerful mechanisms that we have kind of right before us, where we can grab a hold of them and maybe do something cool and be on the leading edge of innovation when it comes to some of these concepts, because there's only handfuls of companies that are doing some of these types of things right now. And so to be able to think that we could be involved or do something like this is quite remarkable. Very few times in history have people been able to be involved on the leading edge of something like this. So this has been super helpful. I appreciate it.
Yeah. Thanks,
man.